SpaceX is gearing up to go public at a totally mind-bending target valuation of $1.75 trillion. But here is the crazy part that almost nobody is talking about. Rockets are not actually how this company makes its billions. We're going to uncover their real secret weapon in just a minute. To put the sheer overwhelming scale of this into perspective, just wrap your head around this number, $1.75 trillion. SpaceX is looking to raise $80 billion in capital right out of the gate. That is going to make this the single largest initial public offering in human history, literally making them one of the most valuable companies on the planet overnight. Okay, let's dive right into this. Section 1, the biggest IPO ever. Let's crack open that S1 filing. Now, if you thought SpaceX was just a space exploration company, well, their official paperwork paints a completely different picture. They're claiming an unfathomably large total addressable market of $28.5 trillion. But look at the actual breakdown here. The space segment, that accounts for a measly 1.3% of that opportunity. Meanwhile, artificial intelligence accounts for a staggering 93%. They're basically pitching themselves primarily as an AI and enterprise giant, not a rocket company.
But before we get too caught up in the potential, we have to look objectively at the costs. $37 billion. That is the staggering amount of historic losses the company has accumulated since its inception. That's more than any other company going public in history. I mean, they posted nearly $5 billion in net losses in 2025 alone.
Which brings us to Section 2, the secret cash cow. What actually pays the bills around here? If the company is burning through cash at that rate, what is keeping them afloat? Well, it's time to close that loop from earlier. Just look at this 2025 revenue breakdown. The true engine of this entire business is Starlink, their connectivity division. Starlink generated $11.4 billion, which represented roughly 61% of SpaceX's total gross revenue last year. It is an absolute powerhouse. And this brilliantly illustrates exactly how the SpaceX financial machine works behind the scenes. Starlink generated $4.42 billion in actual profit last year, with massive 63% margins. Those huge profits are actively subsidizing the heavy losses coming from the space and AI divisions. Make no mistake, Starlink is the absolute crown jewel that's keeping this massive valuation alive. All right, Section 3, the AI money furnace, and that huge merger with xAI. So, SpaceX recently merged with Elon Musk's xAI in a massive all-stock deal. But let's walk through this side-by-side comparison for the first quarter of 2026. Connectivity, which is Starlink, made $1.9 billion in profit. The space division lost $662 million. But look at that bottom row. We see a brutal $2.5 billion quarterly loss from AI. It is currently their worst-performing division financially, by far. There is a massive gap here between AI hype and AI reality. SpaceX acquired xAI at a $250 billion valuation. But right now, about 40% of their projected near-term AI revenue actually comes from a $15 billion a year deal to rent server compute space to a direct competitor, Anthropic. And the really fragile reality here? Anthropic can cancel that contract with just 90 days' notice. Digging through these SEC filings also reveals some highly unusual corporate governance details. For instance, the documents show that SpaceX purchased 1,300 Cybertrucks from Tesla last year for $131 million. And they paid full retail MSRP with zero volume discount. You know, this has definitely raised some eyebrows regarding potential related party conflict risks between companies that are controlled by the exact same CEO. Moving on to Section 4, the Starship dependency, a critical point of failure. So, the crucial point here is that when you shift from finances over to engineering, there's a single physical point of failure that this entire $1.75 trillion valuation rests upon. Without the massive Starship rocket succeeding flawlessly, the entire financial model basically collapses. The prospectus clearly outlines that the company needs an insane flight rate, meaning launching hundreds of times a year. Starship is absolutely required to lift the heavy 200-ton Starlink version 3 satellites, and it's essential for their proposed orbital data centers. If Starship gets delayed, well, the projections completely fall apart. Section 5, the NASDAQ index trap and forced ETF demand. We absolutely have to talk about the complex financial engineering behind the listing itself because millions of everyday index fund investors, maybe even you, are about to buy this stock whether you realize it or not. The NASDAQ quietly adopted new rules just prior to this listing. First, they are allowing a tiny 4% minimum float of available shares to dictate the total market cap. Second, they created a 15-day fast-track entry to get right into the NASDAQ 100 index. And third, there is a hidden multiplier that legally forces passive index funds to treat that tiny float as if it were 3 times larger. So a minuscule supply is going to dictate the price for a massive wave of mandatory ETF demand.
And just to add fuel to the fire, a highly unusual 30% of the available float is being explicitly reserved for retail investors. Meanwhile, the insiders, they're bound by a strict 180-day lockup period where they cannot legally sell a single share. So you have extreme retail hype, tiny supply, and forced ETF buying. It's creating the absolute perfect storm for wild, unprecedented market volatility.
Which leads us to our final part, Section 6, Humanity's Future in Space and Ultimate Control. Ultimately, the whole shebang comes down to the unparalleled structural control of the founder. Get a load of this percentage, 85%. Through a dual-class share structure utilizing supervoting shares, Elon Musk is going to retain over 85% of the voting control of the newly public company. This means he has absolute authority over the board and literally cannot be fired by public shareholders.
The filing also outlines a pretty extraordinary compensation package. 1 billion shares will vest for Musk when a permanent Mars colony reaches 1 million inhabitants. Notably, the company booked this massive award at completely zero cost on their balance sheet. Why? Because, as the filing admits, under standard accounting rules, achieving that goal is currently categorized as improbable.
And that brings us right back to the core mission. Hidden among all the standard legal disclosures about lease agreements and risks, the S1 explicitly states their primary objective is to, quote, extend the light of consciousness to the stars. It is a uniquely grandiose sci-fi mission statement completely juxtaposed against traditional Wall Street reality.
Which leaves every investor, trader, and spectator analyzing this explainer with the ultimate question. As these staggering numbers hit the public market, is this humanity's greatest leap forward or the most overvalued index trap in financial history?